It seems that the window is very, very small for people who are looking to get increases in their wages over the next little while, because there are a very special set of circumstances that make right now a time better than any other for people to be looking to get those wage increases. But that chance, that opportunity, looks like it's not going to stick around for the long term. And this is exactly what Lana Payne, the head of Unifor, one of Canada's largest private sector unions, is saying right now. And it seems that every opportunity that people are getting, they're asking for higher wages, because there's a lot of excuses to want those higher wages, right? We're seeing record high inflation. We've seen that for the past year. And the situation where people actually have the leverage to ask for higher pay is actually around right now. We have a very, very tight labor market. But it seems like that situation with this tight labor market isn't going to be around for very much longer, because the Bank of Canada, through what it's doing to fight inflation, is actively fighting against that pressure, trying to increase unemployment, allow for a less tight labor market so that we don't see inflation lingering on for the long term. But in the short term, it seems that Unifor, as well as many other private individuals, are looking for pay increases now to take advantage of the opportunity before all of that happens.
In our experience, when you look at some of the nations who went in to basically raising their rates earlier and fast, their inflation has not come down, because it's not addressing things like global supply chains. It's not changing the war in Russia or the war in the Ukraine. It's so piling on this pain on top of working people right now. Is that really the smart thing we want to do? We want to be able to make sure people have good jobs, that they're able to lift themselves up at this moment in time with a tightening labor market. We've been able to do incredible things at the bargaining table as a result of this. But not keeping pace with inflation, wages, all of those things for 30 years, and you finally get a moment when you can do it, and we have the bank swooping in to do these things. So it's a very big challenge right now.
So she's suggesting that the route that the Bank of Canada is currently on is not the right one, at least for workers, right? Where they're raising interest rates to try to make it harder for people to pay for things, so that there's less demand in the economy, so that eventually brings inflation down, right? If you've watched the channel, you'd be super familiar with this line of thinking. But what she's claiming here is that even when central banks in other countries around the world have lowered or have raised interest rates to try to lower inflation, they actually haven't seen that inflation go down. That's one of the key points that she's bringing up here, but it remains to be seen whether or not this is actually accurate, because when the central banks raise up interest rates, it's often a lagging effect, right? We don't see that the effects of that policy immediately. Sometimes in certain sectors that are more exposed to debt and interest rates see it more quickly, right? Like we're seeing real estate see it pretty dramatically, pretty quickly, because that's a direct impact. But most of the other areas of the economy, this interest rate hiking actually sort of trickles into it. But at the very least, she's saying, hey, we haven't had any evidence that it's going to actually properly bring inflation down. We've only seen a data point where inflation has stayed the same for 1 month. So we think that the Bank of Canada shouldn't keep raising interest rates, and we should actually give people a chance to have their wages keep up. And she's not entirely without a point here. We've got this chart, and this is going to show lost wages in terms of inflation, right? So we have inflation relative to the wage price increases, and you can see here currently since the beginning of the pandemic, we're actually down a negative 1.4%. Oh, and I'm realizing that you can't see me, so I'm going to move myself up here. Yeah, you can see down negative 1.4% in real terms, right? So people's earning power is going down, even though some people are getting raises. We went over the jobs numbers earlier, and we saw roughly 5% increase on average for pay. So even with that average raise increase, we're seeing a negative 1.4% in terms of real wage growth. So a shrinking purchasing power. So according to Unifor, now is the proper time to be fighting for these wages before the Bank of Canada makes this major change, which we're going to talk more about in a second. But they're taking action on this, right? They're adding more pressure on these the different organizations to raise income for the workers that are in these unions. We can see some examples here: a 5.3% wage increase for mine workers, 5% for logistics workers, while Teamsters Canada won salary increases up to 7.2% for dock workers workers and truck drivers. And this is even expanding into the public sector, right? We saw this last week in Ontario. And that was with education support workers, right? This was a lot of drama going on. If you're from Ontario, you probably would be familiar with parents saying, hey, I don't want my kid to not be in school again after doing that multiple times over the past few years. But avoiding a strike, they settled on a 3.6% annual pay increase. That's per year over the next 4 years. But when it comes to federal employees, it seems that Trudeau and the Liberals aren't budging right now, with 4.5% raise increases in the works. But obviously, the Liberals not saying yes to that. But this shortage in the labor market that's leading to people raising wages for people because they can't find workers, well, that situation likely isn't going to last for a very long time, because as the Bank of Canada works to raise interest rates, we're going to see more unemployment, and that's exactly what's echoed here by Unifor's head economist.
So if we're trying to slow economic growth, we're trying to slow demand. That's what the interest rate hike does. It makes things more expensive and slows demand. That slows job creation and could create a recession. And a recession, by definition, will put people out of work. So the people who right now are struggling the most because of inflation will lose their jobs or will not get a job. And that creates a different kind of pain, or pain from a different sort of hammer, that means that people still can't buy food, they still can't pay their rent, those things. So it's not the solution that we're looking for.
For workers, this interest rate hiking methodology by the Bank of Canada is not the answer they're looking for, saying that, hey, we're just trading one kind of pain for another kind of pain. We're trading the inflation pain for the not being able to get a job pain. But the Bank of Canada looks at this through a little bit more of a rosy lens, saying that they don't expect job losses to be too bad.
We affect interest rates, and interest rates affect spending. So we need to slow spending. I mean, what we've put out in our forecast a couple weeks ago is we actually think growth is going to be close to zero for the next few quarters, till about the middle of next year, and then we think it's going to pick up. So that's going to be a significant slowing. Unemployment rate is going to go up. We're not talking about high unemployment rates that we've seen in past recessions, but it is going to go up. The labor market is very tight. That's a symptom of an economy that can't keep up with all can't produce all the goods and services Canadians want to buy.
So the Bank of Canada is making a gamble that they won't raise interest rates too high so that we see dramatic unemployment here in Canada. And they're also kind of making this bet that they believe that the labor market is so tight that even if they were to raise unemployment numbers slightly, or put a pressure on unemployment, an upward pressure on unemployment, that people would sort of fill those jobs that are vacant currently, and that we likely won't see the mass unemployment that we've actually seen in previous recessions. And at the same time, other people would argue that the bigger problem long term is actually having enough people to fill jobs, period, with the demographic changes that Canada is seeing, with so many people aging into retirement, aging out of the workforce, and the birth rate in Canada being far lower than it was many decades ago. So you can sort of start to see the two sides here. Some people saying, hey, unemployment and raising interest rates is not the way to fight this thing. And then the Bank of Canada saying, hey, we shouldn't actually be all that worried about unemployment, because we're not really likely to see it unless we really go too far on the interest rate spectrum. And the Bank of Canada is saying that, hey, we're pretty confident that we're feeling okay about this right now. But in the short term, the situation right now is that we have that tight labor market. We have not enough people for all of the jobs that are hiring right now. So if you are currently in a position, now might be one of the last chances to, hey, ask for that little bit of a bump up in pay. You certainly have the data there, 5% on average over the last year, which is still lower than inflation, right? And negative real wage growth. So at the very minimum, people are saying, hey, I should be getting this to sort of maintain the same cost of living. But again, that period might not last as long as we might think if the Bank of Canada continues on in this trajectory. But I'm curious what you think about all of this. Do you think that, hey, maybe we might be in this period where the labor market is so tight and people are able to get jobs more easily, get raises more easily for the long term? Or do you think that the Bank of Canada here, because of its lagging impacts of interest rate increases, do you think that we're going to see that period change, and soon there will be not enough people or soon there will be not enough jobs for people? Man, I can't talk today. Either way, let me know what you think down in the comments. I read every single one and I try to get back to a bunch of them. But with all that said, thanks so much for watching, everybody. Subscribe to the channel if you haven't already done so, and I'll see you next time.